So I thought I'd take a bunch of questions first before we get into the macro metrics. So ask me anything. And I will have to keep this at half an hour max today because I'm not sure how quiet Romy is going to be. And I really don't like him playing with the tablet, to be honest. So yeah, in fact, Sam, can you pop your hand up on Clubhouse? Just because I'll mention this again later, but tomorrow at 12 o'clock, I'm going to be interviewing one of my best buddies, a guy called Sam Hewitson, who runs a really cool business, and I'm going to be sort of extracting as many valuable learning nuggets from him as possible. So I guess this is a little test run. Hey mate, can you hear me?
Hello, I can. Can you hear me?
Hey, yeah, I can. And can people in Facebook hear you? If you can just talk.
Hello, everybody. Can you hear me?
Sweet. Yeah, so that's a little teaser for tomorrow, I guess. Yeah, so tomorrow we'll be talking about to Sam Hewitson, who's just popped in and said hello. I literally just sent him an invite today, so I'm glad it's working. Right, let's kick things off. Sorry, Sam, that was it, really.
That's okay. Thank you. Yes, speak to you all tomorrow.
Sweet. Okay, so Stuart said top 5 Facebook tips for business ads. Oh, okay, so that's a good one. Right, so the first thing you should never ever do is boost a post. So what I see a lot of people doing is that they go onto the Facebook business page, they'll write, an advert or a post that they want, and Facebook will go, hey, would you like to boost this? And you have to understand that the basic default settings in terms of Facebook ads are the best default settings for Facebook, not for you. Okay, so a good rule of thumb is if Facebook ever sort of suggests or hints, hey, would you like to do this because you can do this, that's basically for Facebook's interest, not for you. And so if you ever do a boosted post, you're never going to hit anyone that you want to talk to, because I think the last time I checked, it just broadcasts it to pretty much all age demographics towards the whole of the UK, and no one will really ever see you. So that's the first thing. The second thing is that you've got to be laser targeted to begin with. So for example, if you're in so let's say Stuart. So Stuart's in health, okay? So health for, I guess, elder men. So is it from 40 years old plus? I say elder, older, sorry. It's not that old. I forgot what age group you do health stuff for, but for example, on Facebook, you can then target people in, that like health and fitness and meditation, etc. But let's say nutrition, okay? So you can focus, you can pinpoint nutrition in Facebook. But then you need to nail it down. So the next thing is that you need to look at your demographic and age group. So you will know from your existing business who your main demographic is. So it could be men between the age of 45 to 65, I don't know, that like nutrition, that live within the UK, let's say, or live within, and you can actually put a little pin on the map of the UK and put a radius around it. So you can really geo-target. And when you get a bit more, I guess, cheeky or sophisticated, you can then start excluding areas of the UK that you don't want ads to go to. So I hate to admit it, but every time I run ads, I've split tested this, so this is just the data telling me what works or not. So whenever I do an advert to the whole of the UK, I get, X results, okay? But then if I then start really targeting the areas where I want those ads to go, for example, get rid of Cornwall and Devon, get rid of Wales, get rid of Scotland, don't get rid of Liverpool, Manchester and most of the north, then yeah, the ads work way better. It's weird, and that's just for my niche. So I'm talking about sort of investing type stuff. And I wasn't sure if it would work, because it was basically me getting my big black tar brush out and going, right, would this work? I did the split test and it did. And I guess a lot of the reasons why the results were better when I omitted basically all the extremities of the UK and just focused on the core is because, I think one of the reasons is we're based in Norwich. Well, when we have our physical meetups, we all meet in Milton Keynes. So there's no point trying to get a customer in, I know, Inverness, who's never ever going to make, you know, the bi-monthly meetings. So, it's not working. Oh dear, this is really bad. The battery's just died for the tablet. Okay, what I'm going to do, you stay there, darling. I'm just going to get a battery pack. I'm going to pick up this whole apparatus and try and move and talk. Can you stay here? You stay here, I'll go and get the battery, okay? Right, hopefully I don't lose signal whilst we're doing this. Yeah, so that's the thing. So you need to really geolocate or geo-target your ads. So that's the second thing. The third thing is that what a lot of people do is they try and pick one advert which they think is going to be really amazing. And it never works. So what happens is someone, oh dear Lord. Sorry for those on Clubhouse, it's an absolute shit show over here. Here we go, battery pack, etc, etc. Right. Sorry, I've got a very small brain, so I can't do two things at the same time. I can walk, but I can't talk. Here we go. Right. Battery pack. Damn it. Prior preparation prevents piss poor performance. It's a thing that I'm well aware of. Right. I'm so sorry, folks. This is an absolute mess here. You stay there, darling. I'm just turning the tablet on. Yeah, I think maybe Wednesdays I'll have to do it at a different time because it's hard running this with. Oh, bye Anna. Anna's a cleaner. Okay, yeah. So going back to Facebook stuff. So that's number 2. Oh yeah. Yeah, going back to one ad. So the third thing is a lot of people they'll create an advert. So they'll target everything. They'll target the niche. They'll put how much they want to spend. Total ad campaign budget or an amount per day, and then they'll write one advert. So they'll do a headline, a picture or a video and a title, and then they'll press go. And they're hoping that single advert that they put out is like the best one, which is. Yeah, it's just charging for a little bit, darling. 1 second. And it doesn't do that. So when you're first creating your campaign, you need to split test like crazy. I know, it's turning on. And so what I end up doing is probably making 20 to 30 different adverts. And all I'm trying to do is find out the best title, the best picture or video, the best headline. And by creating 20 to 30 different ads, you can quickly see which ones are working. Okay, darling, remember Daddy's working. Okay, so you have to be quiet. I'm turning this back on. I'm so sorry, folks. Right, sorry. So that's that. And the next thing is, so split testing the ads, and then tweaking it. So actually the metrics. So this is the biggest thing. A lot of people look at the wrong metrics. So they'll, let's say you have 2 adverts, and one advert's got, cheaper clicks, probably better CTR, click-through rate, etc. And they may look at the CPC, cost per click, and the click-through rate, go, oh yeah, that's the best ad, and they'll turn the other one off. But the thing is, what you need to do is look for conversions. And so I think most of the time, 9 times out of 10, the ad campaign that works best is when you do Facebook conversions, okay? Facebook doesn't like it when you try and drive traffic away from the Facebook environment. So they don't like doing CPC, pure CPC, cost per click ads. They don't like that. What they like doing is you putting a pixel on your website and choosing the conversions bit, and then you sort of let the Facebook algorithm work for you, and you can make it work for you. So what you need to do is put the pixel on your main website. So I don't know, Stuart.com, I don't know what your website is. And then that pixel will be on every other page of that domain of Stuart.com. So let's say you're driving them to Stuart Health Tips page. The pixel will be on there. And so when you're doing the conversions, what you then tell Facebook is to look out for everyone that has gone on that page. But actually, that's another flaw here. A lot of people start putting the conversions on people landing on the landing page. But you don't want that. What you want are people that actually buy or opt in. So, sorry, 1 second. I have to turn this game on, and then let's start with little wins here. So, Okay, can you lie down again?
Yeah.
I'll get this. Sorry.
Like
Professionalism doesn't really come with me. Playtime Island? I guess. CBBS? Can't be that dangerous. It's okay, honey. Yeah, just 20 more minutes and I'll be done. Could you get the game working again, please? Sorry. Okay. Oh, mummy to the rescue. After all that. Thank you, honey. I'll repay at the other end. Right, okay, so I think that was, oh yeah, so as I was saying, sorry, you'll get my full undivided attention now. So what you don't want to do is track people that are landing on your landing page, because, I mean, you can do that with Google Analytics anyway. What you need to do is, if you have an opt-in form or you're selling something, you need to pixel the thank you page. I mean, this is Facebook marketing basics, but a lot of people don't do this. And the reason you pixel the thank you page is because you want to know everyone that lands on that thank you page. And if someone lands on the thank you page, that means someone's bought or opted in. And so what then happens is, once you get above 50 conversions, so once basically Facebook have detected that 50 people have landed on that thank you page, it then exits the Facebook learning phase. And then basically what you've shown to Facebook is, yeah, I want people to land on the thank you page, not the landing page. I want people to actually convert. And then it'll look at those 50 people that converted and go, oh, okay, so there's similarities. There are patterns and similarities amongst all of these 50 people. And then Facebook will actually go out and go, oh, well, I've got another couple of thousand of those people that look identical. And then they'll start serving that. And that's the key with Facebook ads. So you really have to split test like crazy to find the best ad copy, the best picture, the best video, the best text, the best call to action. And that's not the end of the game. So a lot of people think that it's like a panacea? Panacea? Sounds delicious. Panache. Oh, I can't do words. They think it's like a silver bullet when they think, oh yeah, I'm going to get the world's best Facebook marketer and they're going to boom my business. Well, here is a brutal reality or fact. You can get the world's best Facebook marketer to drive ads to the world's worst funnel or business or offering, and it will do nothing. Whereas you can get the world's most mediocre Facebook marketer to drive traffic and eyeballs onto a good product or offering, and it'll do really well. And I've wasted a lot of money in the past paying, the world. In fact, I have actually hired the world's best Facebook marketer. He's the guy that blew up Sam Ovens, is it? The guy in New York, the Kiwi guy in New York. Also the guy that did all of Mike Dillard's stuff. So I'm not going to say his name, but the Facebook guy who did all of that, I was like, right, I'll pay whatever money. So I paid this guy $15,000 for 2.5 months. So yeah, basically it's $7.5 a month. And so before that, what I then did is I did my own campaign. So I had some sort of benchmark, and then I compared my results to his results. Same thing. Now the reason it didn't work is because it was my offering, my product, the thing I was trying to drive just wasn't good. And if you ever have a product where you get lots of eyeballs on it, and people still aren't buying, well, that's the world giving you a freaking hint. And the hint is you suck. Your product sucks, your offering sucks, the messaging sucks. And even if your product doesn't suck, it means everything around it sucks. Like, as I said, the messaging, the positioning of it. And sometimes, and I see this again with a lot of people, there are huge experts out there that have an amazing product. So like, yeah, Stuart with his health product for older men, etc. Like, it may be great, but people cannot get the message out there correctly. And I suffer from this as well. Like, I know the WAP, as in the Wealth Action Plan.org, or no, thewap.org is amazing. Like, everyone needs the WAP. It's like a Netflix for wealth generation, investing, and business creation. But am I good at getting it out there? No, I suck. I'm not a copywriter, and really, I'm not a marketer. I'm just someone that just knows enough to get along. So I guess, in a nutshell, they're all the key things. At the end of the day, it's all about the offer. And there have been so many times, like, in fact, here's a recent one. So My Fairy Pen Pal, the business I'm running with Ellie, we really struggled with that to begin with, getting traction. And it was the offer. It was simply the offer. And all I changed was literally the offer. I think it was like £45 for 3 months, something like a trial. 3-month trial for £45, because we had high costs back then. So that was really all we could do. And then nothing worked. I wasted like 2 or 3 grand on ad spend. Nothing worked. And then I was like, right, okay, let's change the offer. And the offer changed to a 2-month trial for 15 quid. And then boom, literally 1,000 people bought it like that within a month. We sold 1,000 2-month trial packs for 15 quid. Now, obviously, we were losing money because of the high cost back then. However, it's a really good example of, you know, the offer being tweaked, and then the marketing was exactly the same. I used the same freaking advert. But the key thing this time was that very quickly we got 50 conversions, as in people opting in, and then Facebook went, you want people like those 50? Sure. And then they started throwing them in. Right, that's 16 minutes into this. Let's now get on to... So Stuart, hopefully that helps. Again, in the WAP, there is a whole Facebook marketing module in the WAP. Go through it, it's in depth. I'll literally do screen shares of exactly what I do. And you'll see the exact clicks and things I did when I set up the My Fairy Pen Pal ad campaign. Because that worked amazingly. Right, time to get into the macro metrics. And as the title says here... Oh, Aaron, yes, I'm on Clubhouse right now. Just find Siam Kid on Clubhouse and then, yeah. So the title says, Macrometrics, what actually moves the world economy? And so this is really important because a lot of people look at, something's going on here. They look at a lot of, they watch the news and they see all these news announcements and I guess, if you follow the news, I'm pretty sure you don't understand what's going on with the world in terms of the financial world. Because it's not about, if the stock market has a quick rally, I guarantee you it's most likely nothing to do with whatever event that the journalists attribute it to. And so there's a bunch of metrics which move the world. And you have to look at leading metrics, okay? So just like with trading, you have leading and lagging indicators. Again, in business, you have leading and lagging indicators. So like with business, a leading indicator would be, how many phone calls per day are your sales team making, okay? And if that number starts dropping and starts sliding, well then that's a leading indicator because you know that if the activity is dropping, your productivity is also going to be dropping down the line. So that's a business example. Now, in terms of a world example, a lot of people focus on GDP. And although it somewhat is a major metric, it's not really a leading indicator. And mind you, it doesn't have to be a leading indicator. But here are the things that, just because I got a bad memory, I do know these. I just wrote them down because I had Romy here and I knew I was just going to forget. So the most important thing is MV, so money velocity. And all my students are probably going to be, I'm so bored of Simon going on about MV. But money velocity is the most important metric on the planet. And yes, I'm trying to hype this up because it is so freaking important, yet no one knows about it. Money velocity. So if you just type in money velocity Fred on Google, you'll find the Federal Reserve website and it will show you the US money velocity. Now the chart, I don't know which way it looks like on here, but basically it's a chart that's just going vertically down. And it's based on a quarter. So what happens is effectively this MV chart, it tracks, a metaphorical dollar that gets into the economy, and over the period of a quarter, so 3 months, how many times does that dollar move around? So if the number is 1, that means the dollar enters the economy and doesn't do anything. So whereas if it's like 1.1, it does, it moves once basically. So if you look at like the 20-year chart of MV in the US, it's just a vertical line. And what happens is when you, in fact, let's tie this into what's happening right now. So at the moment, everyone is pretty much aware of QE going around the world and the amount of financial stimulus. Now, it's not just quantitative easing, it's all sorts of other credit, open credit lines and stuff like that. But what I'm just going to use is the word stimulus. And when I say stimulus, I mean everything from money printing, not that they print it, to all sorts of open credit lines, etc. Now, if you look at the charts of money printing across the world right now, it's like a vertical line. In fact, from March 2020 to August 2020, so March, April, May, June, July, August, yeah. So 6 months, so in that 6 month period in 2020, where basically the world was shitting itself, the US printed more new dollars than 2008 to 2012 combined. So if you cast your memory back to the subprime mortgage collapse in 2008 and when they started massively printing, the plunge protection team came in and went, right, we need to prop the markets up, print. And they started going, well, yeah, I mean, that was huge back then. Well, in 2020, like in a 6 month period, they matched 4 years worth of QE. It's just insane. So every country right now, the currency supply is just increasing massively. Now, every journal, every man and his dog is saying, oh, inflation's around the corner. It isn't. Inflation is nowhere near. In fact, I saw, I think it was in the Times. I don't read the news, but there's a headline that popped up, and it's something like, inflation rears its ugly head, or it's about to pounce, or something like that. And I was like, I call bullshit. And the reason being is, just think of it this way. How many in this group right now? So, on Facebook right now, there are 34 people, okay? So let's say I don't have my wallet on me, but let's say I put £1 into this Facebook room, okay? And I don't know, who's the last person? So Danny Giroux is just joined, and I buy something from Danny Giroux for £1, okay? So even though there's £1 in existence, and it's moved once, the GDP, so to speak, is £2, okay? And so if Danny then sells something or buys something from Paul, and then Paul buys something from Adam, and so forth, and let's say there's been 10 transactions, even though there's £1 in our little ecosystem, because it's moved, let's say, 10 times, the GDP is now £10, okay? So this is just a quick concept you need to sort of park somewhere. So the GDP is always dramatically more than the money supply, because because the amount of times that dollar is moving around, okay? Now, let's go back to the inflation thing. So let's say I've got my money printer here, and instead of the £1 I inject, I'm now going to put like £10,000 into this Facebook group. But let's say everyone's so shit scared of everything, and this, or just everything, no one's buying or selling. That, our Facebook economy here is ground to a halt. No one's doing anything. Well, what is the money velocity? Well, the velocity is like 0, or let's call it 1. It's not doing anything. Any money I pump into the economy isn't going to move anywhere. And therefore, GDP will still fall, or keep on falling, even though the amount of currency has been printing is going exponentially high. And so inflation only rears its ugly head when MV starts spiking up. And so this is this weird sort of seesaw that the Federal Reserve, I mean, by the way, if you're on Clubhouse, you're going to have trouble trying to get this. I am using my hands and everything here. But yeah, so the central banks across the world have this weird seesaw. So that MV's going down, and it's down, down, down. And so they're like, oh shit, what we need to do is we need to print. And the reason they're trying to print, or in stimulus pump, is because they're trying to basically get at like one of those defibrillators and spark life back into the economy and get people spending. Because the reasoning is that if we just make credit so cheap and easy to borrow and will give people free money, they're going to spend it. But we're not. We're not spending shit because we're so scared. We got slapped in the face in 2020. We're unsure about 2021, even though it was obvious it was going, or to me it was obvious that 2021 is going to be worse than 2020. Yeah, and so no one's spending. And so they can print whatever they want. If the public as a whole, as in, let's say the 2 billion people in the developed world, start getting happy and they start going out into the economy and spending, then we'll see MV tick up, and that's when the inflation starts to kick in. But inflation it's impossible for inflation, as in price inflation, to kick in if the money isn't going anywhere. Now, this also so this is why I just saw someone comment, Yegor, I think he said, that's why we might see negative rates. I agree, and I've been saying this for a good year now, a year and a bit. We will see negative rates long before we see big, crazy inflation. And I mean, there's negative rates all over the world right now, and it's just a matter of time until we have negative rates in the US and the UK. I mean, it's pretty much a zero at the moment. And so another way to look at it is, imagine you're driving a car and you're let's say an automatic car, you've got two pedals, accelerator, brake. And that's the same as a central bank, okay? So a central bank has two levers. They can print money or they can raise and lower interest rates. That's the only two things that a central bank effectively can do. And so what happens is, what they try and do is they print. So they're, okay, yeah, let's print money. And so that's the accelerator going flat down. Car's still not going fast enough. Okay, well, let's lower rates. Let's make it cheaper to borrow. And so hopefully that'll kickstart the economy. Nope. And so, yeah, and nothing's happening at the moment. All the tools that they had in 2008 somewhat worked back then, but because they firewalled both of the pedals back in 2009, it doesn't really work. And so if you're in that car, let's say the car does speed up, and all of a sudden, let's say MV ticks up, and everyone starts spending all of the stim checks that everyone's getting, etc. And then MV ticks up, and all of a sudden inflation starts to come in and prices start to rise, like really rise. What then happens is, in order for the central bank to try and slow the economy down and try and put the pedal on the brake, they then have to raise rates, and raising rates is how you slow an economy down. And so we will not. I bet you whatever money. Like, in fact, I am putting my money where my mouth is because I trade actively. And so this is. Oh dear, we've got a delivery. Pips is about to go nuts. Pips hates delivery man. Look how cute she is. Watch her go nuts. Oh, here's the growl. Anyway, so we'll see negative rates because, and the only way, in my opinion, is in order to get MV to go up, is you need UBI. You have to. People are so scared. Most people don't have a rainy day fund. And most people got absolutely slapped all over the face in 2020. They didn't have a rainy day fund. Oh, there we go. This is like the most disjointed 1 minute, sorry. Right, sorry, most disjointed live session I've ever done in my life. So sorry. So what was I saying? Negative rates. Yeah, we'll have to. UBI. So the only way we can get the public to go and start spending like crazy is to give out a universal basic income, but a time-stamped one. So literally, hey everyone, here's £500 a month, free money. You have to use it, and it has an expiry date of 30 days. Use it or lose it. And if you don't spend that £500, it literally just disappears, and you can't use it. So that's the only way we can get the world GDP back on its feet and spending. But you can't have a time-stamped UBI without DigiCash. So this is the thing. This all makes sense. To me, this is so crystal clear what's happening, and all of my conspiracy theories a year ago or 2 years ago are now becoming just general news, and it's just ridiculous. And so this year is going to be the year of the anti-cash. I'm going to start outlawing cash and demonizing cash, and every central bank in the world is going to suddenly pop out with their digital version of their currency. So we'll have DigiPound, DigiDollar, DigiEuro, etc. And they'll go side by side, and eventually, they're upping the contactless already. I said that would happen. And what will happen is that they'll do this slow shift where they'll get it so most people start using digital. I mean, you'll get a digital wallet, which is like a bank account, and you won't even know it. And they'll do it so people don't really know the difference. I mean, the money in your account right now is pretty much digital already. That's what they're relying on. Like when you log into your Barclays bank account or whatever, and you see your numbers, as in your money there, it's not actual physical pound notes, is it? It's numbers. So the public won't really know the difference. And then once we've got rid of cash and you can't escape and like bury your, park your cash under the mattress or stuff like that, that's when the bad stuff happens. But I guess on the flip side, once we are in a DigiCash, they can then do, i.e. programmable money, then they can issue a UBI. But the UBI will come with lots of caveats. So it'll be like, hey, I mean, they may start off small. They may go, hey, everyone, we're going to streamline welfare and benefits. So we're just going to make things fair. And every single adult above the age of 18 will get £400 per month, time stamped, obviously. Use it or lose it. But in order to get this, you have to have a COVID vaccine, have a COVID passport, have all of this sort of stuff. There'll be all sorts of caveats. In fact, I've got some hands up here in Clubhouse. Aaron and Ray, you have the mic. Did you have any questions?
Hi Siam, how you doing, man?
Hi, mate.
Basically, I've been, to be honest, actually, I was on your Clubhouse last week, and I've been waiting to ask you this question.
Okay.
For a while, mate. I was listening to an interview, a radio interview, by a guy called Richie Allen. I got sent it on Telegram, in a crypto group.
Okay.
And there was a lady on there, pretty much kind of echoes what you've been saying now, and what you just said, about how the US economy is bringing more and more money, 21%, like, and the figure is. And basically the only way to stop inflation is by stopping the economy, which is kind of what's happened. So when things get back up and running, she thinks that basically everything's going to go to shit. And what she was saying is that she also mentioned about Bitcoin with the toll tether thing. I don't know if that's been dealt with now or not. But she was talking about all the things to do with how expensive, like the hyperinflation, things that you basically said.
Okay.
What my question was, where is a safe place to invest or to kind of protect?
Crypto. Literally. Crypto is pretty much the only safe haven right now. And if you want to be like really safe, just put it into Bitcoin. Bitcoin is the safe haven. It's the only non-sovereign currency on the planet which has been battle tested. It's never been hacked. It's bigger than pretty much any company on the planet with about over $1 trillion market cap. It is the safe haven. As I said in previous interviews or sessions, it's in comparison to global currency supply, it's a deflationary asset. So the price can only go up. So, yeah. So the safe haven is crypto. So this is why...
So, I mean...
Oh. Yeah, go for it.
Sorry. I was just going to say... can you hear me okay?
Yeah, you're cutting out every now and then.
Funny. Sorry about that. Basically what I was asking you was, she also mentioned, because they mentioned about Bitcoin, where would you put your money and this and that, and she was talking about gold and silver. She was saying the whole tether thing, I think you talked about that as well previously. Has that been dealt with? Or is that done now, or is it safe now?
Yeah, it's a lot of the sting has been taken out of the tail now that they've settled out of court. So it's still an issue, but it's not going to floor it and take it to zero. So
yeah. So and in what you said, invested in crypto. So I have asked you this as well before, but for anybody else that's listening that's new, I mean, previously years ago, you would say invest only what you can afford to lose. What the percentage that is of your wealth. What would you say now? Has that changed?
So
is there a percentage now that you would say?
Yeah, so before, I've always said only use risk capital to get into crypto. Anything you can afford to lose, anything you can afford to just park and leave there for a few years. And for a lot of people, I would say for most people watching this, that's still valid, not advice, I can't give investment advice, but that's a valid nudge, I guess. Like with anything, especially things that you don't understand, which most people don't understand crypto, it's worth just putting risk capital into it. However, if you want to really own your sovereign, your monetary sovereignty, and you really want to get on top of this and stay ahead of the curve, I think it's absolutely essential that you understand crypto. And when you understand crypto, you'll really get to know, really what's going on, and then you'll realize, holy shit, yes, it's volatile, but it's not risky anymore. Which is why personally, I don't have risk capital in the market now. I have a considerable percentage of my liquid net worth in crypto right now. And so I guess this just goes back to anything. Like in life, I've always looked at things, like I've always been a Star Trek fan. I grew up with Captain Janeway and Seven of Nine. Like I was a Star Trek Voyager geek. Like I knew everything about Star Trek Voyager. And I've always been a fan of, Spock and Tuvok, the Vulcans, and that logic was their religion. And so like a weirdo, from a very early age, I've always thought of, okay, I'm going to live X amount of years. What are the key things I really need to learn to do well in life, or to be at least above average in life? And I realised, okay, well, people are aggressive sometimes, and it'll be handy to know how to fight. And it also helped that my parents started me or forced me into Muay Thai kickboxing from the age of 6 onwards, and then Taekwondo and all that sort of stuff. So knowing how to fight and look after and defend yourself is handy. Okay, cool. Being fit and healthy and agile, and knowing how to swim, all these basic things. Okay, nailed that. What else is there? Obviously, back then I was okay, I need to get a good job, and that's why I tried to get in the Air Force. Okay, nailed that. And then as I grew older, I realised, really, you actually need to master money. You need to master wealth generation. And so once I realised that wealth generation was such an important part of life, even if you don't like money, even if you're one of those people going, I'd rather be happy and poor than rich and sad. And by the way, you can be rich and happy, and you can be it's not an either or. You can be rich and happy, and you can be poor and unhappy. I've been poor and I've been rich, and I've got first-hand evidence that it's way better being unhappy and rich than unhappy and poor. It sounds really douchebaggery, and I used to have a phrase that I'd rather cry in my Aston than my Astra, but I don't say that anymore because it's a bit of a dick comment. But it's true, honestly. It's just things are a lot nicer when when you have a bit more money. So understanding money is so important these days. And so what is money these days? It's it's basically it's crypto. It's getting towards crypto. So crypto is the next logical thing you absolutely pivotally need to understand if you want to basically get ahead of the curve and don't get absolutely steam trained by the world of pain that's inbound. Right, I think I'm gonna have to end this here because sorry, Ray. Yeah, sorry, you had your hand up. Sorry, last question.
No, sorry, I was just going to ask, on the UBI thing,
yeah.
If they start issuing UBIs and you've got to spend it by this date, how are they going to encourage people to spend the money that's in their account? Because I've just finished Currency Wars, and I've been thinking quite a bit about a lot of the stuff that he says in there. A lot of it is actually quite simple to solve the problem, as you'll know, because you've read it. But people don't want to pay the piper. So if they're going to give UBIs, are they not just going to be recycling the government's printed money that the government is using on construction and road and infrastructure projects in any case?
Yeah.
Is that going to be sufficient to kickstart people to start spending their own money?
Yes, because they know that the public are stupid as a whole. And all they need to do is create a good... you can get the public thinking anything you want within a 3-month period. And it's all about nudges, especially in the UK. They have a department. It was all about little pulls and little nudges. they wanted people to stop using plastic bags. So one of the little nudges they did is charging people 5p for a plastic bag. Guess what happened? We now dramatically cut the amount of plastic usage in the UK. Now that's a good use of pulls and nudges. But the thing is, if they wanted, so in order to get people happy and spending, all they need to do is create 3 months of positive vibes and everything is great. Look how high the stock market is. Look how high Bitcoin is. I don't know. Like, everything is great. Let's pump up property prices for a bit. My house is going up in price. And so all you need to do is create 3 months of this. And before you know it, every man and his dog is thumb and bum, mind and neutral, happy as Larry. And they're like, oh yeah, maybe I will go on holiday again. They will eventually. They'll open things up once everyone's bagged and tagged with a passport or COVID passport or whatever, and then people start going on holidays again, and then they'll think, oh, okay, we're somewhat back to normal, and then people will start spending, and all sorts of other incentives will pop up. Like back in, I remember 2009, there was a government car initiative. They're like, scrap your old banger, and you'll get a massive discount off a brand new car. They're basically trying to prop up the automotive industry. So there's so many other things like that. But I'm so sorry, folks. What we will do is tomorrow we're interviewing Sam Hewitson, which is going to be a really good interview because he's a top bloke who's going to lose dramatically at golf to me this year, but he's got a really good business. So we'll get some good nuggets from him tomorrow. And then on Friday, we'll continue with this macrometrics theme because I've looked at the questions here and there's so many other questions I really want to answer, but I'm afraid I'm going to have to relieve my wife from Romy. Because it's actually, I'm being cheeky by doing this. So hopefully this has helped. I'll see you tomorrow at 12 o'clock and I'll see you on Friday at 12 o'clock. And yeah, in fact, we only spoke about MV. We've got a whole bunch more to talk about. We've got sovereign debt, corporate debt, private debt, GDP, SME growth, the PMI, and U6. U6 is crucial. Right. U6 is the unemployment rate, by the way. Toodles, see you soon, have a good one, chat soon, bye.